Hi, guys. We're just taking a look at the Amazon.com page for GuruFocus.com, taking a look at the fundamentals. And if you'd like to take a look at these yourself, please look at the link in the description below and you can take a look at this information for yourself. But I'm going to take a real quick look at the warning signs that I see for Amazon and a couple of good signs that I see show up here on this main page. So let's click on that and just see what's going on. So it's giving us one severe warning sign. And so it's telling us that if a company builds asset at 33.7% a year faster than its revenue growth rate of 21.3% over the past 5 years, it means the company may be getting less efficient. So right off the top of my head, I know that Amazon, like a lot of other tech companies, is saving a lot of cash and has been for a number of years. So I don't really know if it's losing efficiency, but it's worth looking into. So let's click on that and we can find out that a 10-year history of total assets definitely shows an increase and quite a spike here ending December 2017. $131 billion worth of assets, a lot of it being cash, but also a whole lot of other things within the Amazon balance sheet. But you can see some of the definitions here. It tells you real quick what it actually determines as assets from the capital sources of the assets. Some of the assets are funded through shareholders paid in capital and retained earnings of the business. Others are funded through borrowed money. Therefore, total assets can be calculated as total current assets plus total long-term assets. And that gives you total shareholders' equity plus liability. So that's worth looking into just a little bit more. So let's look at this link down here. And Guru Focus will get right into the details of its calculations, which is a great place to see where it's getting its numbers from, and it does get a lot of all of its information virtually from the Edgar database, which is the SEC database where companies are required to file. So here you can see total assets over the past 10 years, definitely growing, as I mentioned here, $131.3 billion worth of total assets. And you can look at the quarterly data as well if you find that valuable, but definitely going up. And we scroll a little bit and let's look at the calculation here. So it tells us total assets is current assets plus long-term assets, which breaks down to total current assets and total long-term assets being property, plant, and equipment, plus intangible assets, plus other long-term assets. And it gives you the numbers. You can click on each of these to see the definition and to see where that is within the data. And then it breaks it down just a little bit further. It tells you the calculation and explains it a little bit more. So that is extremely valuable. I love this part of Guru Focus where it really explains the calculations, explains the terminology, and in a lot of cases, it relates it back to different research that is a very important basis of being a value investor. So that is extremely valuable. But going back to the warning signs, so it does tell us that asset growth is faster than revenue growth, but I don't see Amazon losing a whole lot of efficiency, although it may be less efficient than it has been over the years. So anyway, that's a determination you'll have to make and see if what's worth deciding on. So there are 3 medium warning signs, and right away I think a lot of these are going to be related to the price. So Amazon is basically making new highs all the time, a slight dip recently here in March 2018, but basically as close to its highs as it's ever been. And so that gives us a medium warning, and it's something to be aware of. So I wouldn't call this a discounted company by any means. And so it's at close to a 10-year high. That's pretty self-explanatory. The price to book ratio is close to a 10-year high, again related to price. So a PB ratio of over 26 is extremely high compared to its book value. And of course, the price to sales ratio is also going to be high. So all the price related ratios are showing that they're high. And so, of course, trending a little bit higher. So there is a lot of hope in the market that this company is going to continue growing very quickly for a number of years, just based on the valuation. And they may or may not be correct. I have no idea. I think Amazon is going to continue to do amazing things and expand into all kinds of new areas. But that's a whole other debate, and it's something that you'll really have to research beyond this information right here. So let's take a look at the good signs. Immediately, it tells us, okay, consistent growth in revenue, which makes complete sense. Amazon has been growing so fast, not only just in online sales of all kinds of different product categories, but in entertainment, in cloud computing. So a whole bunch of different areas that it's breaking into. So here you can see revenue per share, $360 per share for December 2017. And it's been consistent. So here you can, again, look at different charts and things like that, but consistent revenue growth is pretty straightforward. And the next one is operating margin expansion. So that's a very good sign. It shows very strong competitiveness, and its operating margin is expanding. Let's just take a look at what the numbers say. So a little bit of fluctuation going back 10 years, went down in December or into 2011, 2012. So for a few years there, but that's definitely something worth researching. I don't know enough about Amazon to just tell what happened there, but it does appear to be fairly steady now between 2 and 3. So 2.31 for December 2017. And again, it tells us the definition of operating margins. So it's operating income divided by revenue. And operating income, as it tells us there, is revenue minus cost of goods sold, minus selling, general, and admin expenses, SG&A, minus research and development, minus depreciation, depletion, and amortization, all divided by revenue. So that is recognized as expansion, but definitely worth researching, slightly lower than it was for 2016. So that is a good sign. All right, so that's the warning signs, good signs feature here for Guru Focus on the Amazon.com page. There's obviously a ton of other information that's worth looking into on this website, and I highly recommend that you have a look for yourself. So take a look in the description below. There is a link to this page. You can take a look and start your research if you're looking at Amazon. So I hope you found that helpful. Thanks, guys. Bye for now.